Thanks so much for joining me on the podcast. How are you?
All right, good to see you.
Yeah, it's been a few months. You and I first met at Money 2020 in a secret spot. That's all we'll share.
Yeah, you
No one
can't
has to
disclose
know.
where the secret meeting spot is. It's one of the only spots in Las Vegas where you get actual fresh air and sunshine.
Is it a secret though when there was a lot of people there anymore? The secret is out.
Yeah, I've been meeting there so many times in the last few years. I think people are caught on.
Hey, no, really cool spot. It was great to chat with you. I'm excited now to have you on the podcast. Like this is what we discussed a while back, and we're making it
Yeah,
happen. For those that are just getting to know you, tell us a little bit about your background and what you're involved in, and then I'm really excited to just talk about all things fintech, key trends, consolidation. But let's start with an intro.
sure. And by the way, one of the guys here has a sticker on his laptop that just says FinTech, which I love because it's like brilliant, sort of generic kind of a moniker. But I've been involved with FinTech before we called it FinTech. I think 12, 13 years ago when I first did a couple of deals that I was involved with Venmo, the payments company, and then Braintree, the successor business that, they're both part of PayPal now. I think we just called it payments or digital payments, mobile apps. I think Venmo was technically called like social payments because you would broadcast and tell people what you would spend money on, which at the time I think a lot of people found kind of horrifying that you would disclose that kind of thing. But I've been involved in tech business about 20 years, both as an investor and an operator. Spent many years in Silicon Valley and was at a fund there. And then I've been in New York primarily for the past kind of 12, 13 years. I focus on early stage fintech and e-commerce. I've also been fortunate to have a few operating roles, most recently at Pinterest in San Francisco, where I ran strategy and corporate development, acquired 9 companies for us, and saw sort of the good, bad, and ugly of going through many years of hyper growth when we're still private and kind of building out the business. So kind of have that perspective on both sides of the table, and more recently been involved with 2 larger firms, Graycroft and our old sister fund, which was called eVentures, now it's called Headline. So I spent time at both of those, but primarily today invest on my own smaller vehicle, which is called Capital Ventures, and do all generally seed and pre-seed fintech as well as some e-commerce investing.
And can you share any, well, I guess on the fintech side of things, any recent investments that you've made in that space that maybe you want to highlight here today?
Sure. You always got to think about with PR people in the room. You got to figure out which ones have announced and which haven't. But the ones, a couple that I've done that have raised follow-ons. One is a company called Coast, which people are probably familiar with. It's a later stage business now. I had backed Daniel and his co-founder Josh from Bread at their last company, which at the time we invested was called Loan, LON with a long finger with an O. I'm not even sure what that's called. They changed the name to Bread. We sold the business to Alliance Data Systems a few years back. And then Daniel came to me one day and said, I want to do something new. And he had an idea around trucking and fleet, which is a massive spend area. And he's now built Coast into a business that does financial services and payment solutions for the trucking sector, particularly not for the 18-wheeler trucks necessarily, but more for the smaller fleets, the sort of vans you see around your city and town that do HVAC and plumbing and electrical and things like that. So that's a great business, and we're scaling that out. It's great to work with someone again for the second time around. That's like the real kind of joy and benefit of being in the venture business, having someone come back to you for a second business, which means you were, I guess, either helpful enough or not painful enough the first time around that they're willing to work with you again. And then I've done a couple of smaller things recently. One is a consumer fintech, which I know consumer fintech is supposed to be like box office poison. They'll go near it. But I think whenever it's running the other way, it's the time to kind of actually look towards some of those deals. So it's a business that I don't think has announced the financing yet, but they are using AI and some automated solutions to do financial wealth management. So doing automatic rebalancing of portfolios for tax optimization, end of year, tax loss harvesting, whatever the case may be, but doing that in an automated way so people don't have to keep going back into their account and checking and buying and selling stock and moving things around. So that's a cool one, brand new, just launched recently, and they'll announce the round here I think soon. And I've done a couple other things in and around fintech as well. A business doing sanctions and compliance checking, which is again, may not sound like the most dynamic and sexy part of the stack, but if you're a company that gets hit with a sanctions violation by the government, that could be 6-figure, 7-figure type fines. So folks are willing to pay to make sure that they're compliant. and that's called Castellum, Castelum.ai. So yeah, it's been busy, but a lot more going on as well in the overall fintech space.
Now let's talk about maybe current trends in fintech that you're really watching closely. Are there any particular areas? Obviously, you just mentioned some investments, but um, even some areas that maybe you haven't invested in within the fintech space that you're like, I mean, maybe I haven't, but I'm looking to.
Look, sometimes you have it, and the moment may have passed you by. So one of the spaces I met a number of companies from the early days, including I helped mentor the guys who were starting Novo. I was with the folks that started Row, which was called Underdraft back in the day. I've spent some time with Mercury, but the space I'm talking about is obviously B2B banking. I don't have an investment in that area. I'm sitting here wishing I did, but that's one space that's obviously doing very well, particularly in light of everything that happened with First Republic and Silicon Valley Bank. So you've seen a lot of folks move to the platforms I just mentioned, along with Relay and others. And then you have obviously Brex and Ramp, which are not exactly B2B banks, they're more on the spend management side, but again, doing very well. So that's a fantastic space. And there may be some others coming up too that hopefully I can get involved with. But anything around B2B in fintech, particularly B2B payments, spend management, payment management, anything that helps a business pay another business, that's a fantastic area, and one that frankly does not have a lot of large companies. And the biggest company in B2B payments, we may have talked about it in Vegas, is Bill.com. They're, $10, $15 billion enterprise value company. But you look at all the other companies that are enormous. I mean, Stripe is raising now at an 85 billion valuation or what have you. You have PayPal and Venmo and Square and others. They help consumers pay businesses or consumers pay each other, right? They really don't help, American Airlines pay Dallas Airport for their rental fee of the terminal, right? And so those payments tend to happen today with paper checks and trade credit and faxes and PDFs and things like that. So digitizing business payments is I think, the mega opportunity. And then there are a couple others. One is fraud and compliance, and the other is tax. I think tax is a major opportunity area as well. Sorry, we're getting some dings here from the steam plumbing in New York City, which is a classic sign that I'm on location here in New York. We're not like filming this in Vancouver or something. It's the real.
I just wanted to talk a little bit about, you mentioned Row Bank, and that's RHO, right? For Row Banking, and Mercury, and I know even like the ramps and the Brex, they all have some sort of like treasury type or they're adding it if they don't have it, right? Um, Obviously, with what happened with First Republic and all these other large banks in that B2B space, it was always confusing to me why the Chase banks and these other banks out there decided to not create like a really nice bare minimum interface for businesses to work. Like, that was the reason I initially started using Mercury,
Mm.
was they made it so simple for my rewards and to see my cash balance and what's coming in and what's coming out. And I know it maybe wasn't their core focus, but like that, it seemed like a lot of banks could have stopped the Mercuries and the Rows from even coming into existence if they just innovated the smallest amount, right?
Yeah.
Why does that continue to happen?
And look, JP Morgan bought First Republic, but they've integrated it in such a way where I don't think they've retained the clients, which is such a shame because First Republic had a tremendous roster of both high net worth individual clients as well as businesses, funds, startups. And so that asset is an awesome asset, but I think the way that they did and integrated it, those clients essentially churned. So I don't know, they went to Mercury and elsewhere. They're now trying to bring back a lot of those clients, and JP Morgan is making a big push into startup and digital banking. Silicon Valley Bank is obviously reconstituted and is now part of Citizens, and they're also making a big push to get a lot of those clients back. And the big advantage they have, candidly, over a Mercury or a Row or somebody, is that they can offer additional financial services, in particular things like venture debt and lines of credit, which a lot of startups leverage, and a lot of companies that I work with, I'm on the board of. We'll take a venture debt line from a Silicon Valley bank or someone like that. So that and that may tie into, hey, you also got a bank with us or what have you. So I think that's the major advantage they have. But you're absolutely right that they, for a long time, kind of considered this segment maybe not as attractive. And you have like 10,000 banks in America, and a lot of them are, smaller mid-market banks, and those are the folks that tend to have the SMB and mid-market clients. They're not particularly, technology forward or tech advanced, but it's because I think of the stigma or the sense that, the smaller business clients, they churn more, they go out of business. It could be a lot of like restaurants and things like that that don't last. They're not as profitable, they're more expensive to service. So all these things are kind of the conventional wisdom for why a larger bank hasn't gone after this segment, but I think that's changing.
You bring up some good points though, but also you have okay, maybe they were more expensive to service some of these smaller companies, but part of the reason they were more expensive to service is because the software internally was not set up
Exactly.
to service them.
Right there, and you have all these branches and stuff. So all that's changing. Yeah.
Yeah, it's interesting. Another thing I wanted to talk with you a little bit about was just fintech consolidation. Like, do you think we'll continue to see in 2025 at least and beyond more consolidation in fintech?
I think that's one of the biggest trends you're going to see a lot of is that, and I've been thinking about this and doing some writing on it. And as I look at each of the major kind of subsectors within fintech, because fintech is an enormous mega category, right? It's a kind of a super category where you have four enormous pillars, each of which, has many, many sub categories. And the four pillars are asset management, which includes, stock trading and all that. So asset and wealth. Then you have lending, you have payments, and you have insurance and insurtech. Each of those has multiple areas under it, and within each of those sub areas, in turn, you have, you may have four, five, six companies. Just in B2B neobanking, we've mentioned in this conversation 4 or 5 players, and there are probably half a dozen others that we didn't mention, right? So, do we need a dozen B2B neobanks? Like, probably not. I mean, there's probably one that's going to be focused on maybe tech startups, one that does kind of more S of SMB, one that does more the M of SMB, and that's kind of it, right? But in each of these areas, you have a number of companies, each of which is well funded because the funding environment was so robust for many years, that have cash stockpiles, but that are doing marketing and customer acquisition and hiring for talent, in they're fishing in the same ponds, right? And so it does feel a little bit crowded. And one of the deals that I'm involved with, Jetty, just did a merger with Rhino. They're very similar businesses. I think at some point the two CEOs probably, had to get in a room and arm wrestle and say, let's just do this thing because we're clobbering each other in the market. Let's just join forces. And this is something we saw years ago. I was involved early in my career when, a lot of people don't remember this. There were two travel websites that did something very, very similar where there were travel meta search. You could search Expedia and American Airlines, and there was Sidestep and there was Kayak, and they had very similar businesses. And at some point, the two teams just decided, let's merge. And the merged entity is now known as Kayak, and it's gone on and survived. A lot of the team actually came from Sidestep, and a lot of the tech came from Sidestep. But I think this is a path forward for a lot of these companies is to find a way to collaborate with each other and go forward that way as a bigger entity with more heft and gravitas, and eventually try to get to a bigger outcome.
Yeah, and it can be tough sometimes though, right? Because there's still always for many companies there is with leadership there is an ego factor.
That's the biggest hindrance in most cases is personality and ego, and it's not trivial, right? I mean, I did M&A. Like I know you can't just, force two things together. There has to be kind of a natural symbiosis and a willingness to work together. And it can be particularly challenging if you have two or three companies that have spent the past, who knows how many years kind of mudslinging and and competing. So it's a tricky thing to do, no question about it.
Yeah, it's you know what's crazy though? If more companies did it and did it the right way and were able to put the egos aside, they would dominate.
You'd have bigger outcomes. Absolutely. Yeah, because scale matters in all these businesses.
I mean, even think back to I love that TV series Super Pumped, talking about Uber and Lyft and all. If Uber and Lyft joined forces, oh my god, uh, who else were we gonna have to
Yeah.
use? We would have had to really pay pretty much anything to get a ride. Um,
Look, and this is where with those kind of with consumer oriented businesses like that, then that are already at scale, it's a lot harder because then you do have the DOJ looking at it and
yeah,
saying, that would be, today those businesses could not merge, right? They're each too big. And so from an anti-competitive standpoint, it wouldn't work. But yeah, earlier on, and then, if they would have joined forces, you probably would have had like, Lyft 2.0 or somebody starting
yeah.
behind them to offer something different. So I think it's just the natural cycle and we'll see more of it happening.
I also think not enough early stage companies make that decision to like merge.
Definitely not, because they want, I think as an early stage founder, you have stars in your eyes and you want to go big, and it'd be a very difficult thing, I think, from a, like you said, from a ego perspective to do that.
But I also think if you had more early stage companies merge, it decreases the risk that the merger or acquisition would not be like the likelihood of it being more successful. It's way easier to integrate at the earlier stage than it is when these companies become massive, right? And they have their different cultures. I think more than anything, it'll just be it really depends on the founder and how willing are they to essentially like co-parent their baby, right?
Yeah, I mean, look, I had one that was an early stage business, and we were up against the ropes, and I told the founder, "Hey, listen, I'm close with your closest kind of analog or competitor. Do you want me to make an introduction or connect you to?" And the answer I got from this person, from the other founder, was something along the lines of, I'd rather fail and go away than work with this person, or what is something like that. So you do have some of those situations where it's just like, life's too short, and I'd rather do something different than have to, sell my baby to this guy.
It's an awful thing to yeah, it's, whenever you say that, I always think of that, like, if we were the type of show that inserted, like, GIFs into the show when something
Yeah.
happened, I would put the Grinch, the wrongo type,
Just the Grinch logo.
phrase.
Yeah. It's not like
Lastly
like the Ben Affleck having a cigarette and looking like he's bummed out or whatever.
so all the time? It's
Yeah. Yeah, there's definitely a GIF you could have for this, of like the, womp womp.
I love it. What's next that really excites you as we wrap up here?
So, obviously AI is the big story. The one, I heard a stat the other day that was from a survey of banks, which kind of like, froze me in my chair, that roughly 2/3 of banks that were surveyed by this firm felt like AI's ability to create fraud for them far outpaced their ability to counteract it using AI. So if you thought fraud was bad kind of before, the number of kind of fraudsters and the creativity and complexity of fraud that's being attempted now and going forward, far exceeds what's happened in the past. And so that arms race is on, right? And so the banks are really trying to figure out, not just banks, but really all fintechs, what they can do in terms of fraud checks and anti-fraud to kind of combat that. And
And
that's
I
a big
also think
point for it.
our agencies and whatever other types of business need to be more understanding if someone doesn't pay them on time or something happens because they are worried about whether something is real or not. So it becomes multiple people's problem, not just the consumer or whoever else is doing it, right? Like
Yeah.
half the time I get a letter from the what's it like the US Department of Commerce or something like that for something that seems like it's fake, and then I get a letter from one that's totally fake, and it's like, at what point do I know which is
Right, which is
real?
really, yeah, because they're really good at cloning kind of what a real one looks like.
Yeah, and they don't care. You're probably not gonna find them. So, yeah.
Yeah. No, it's
Anyway,
it's it's the problems are getting harder and harder to crack, which is why, obviously the hope is that with AI you can, fight fire with fire. So we'll see how that goes.
absolutely. Um, well, hey, really appreciate you coming on. Excited to chat some more in the future. We'll definitely continue the conversation, but thanks for shedding some light on some, cool topics, and we'll talk again real soon.
Absolutely. Yeah. Thanks for having me on, Jared.